Hi, in this video from MomentumBro.com, I'm going to go over my 6-week swing trades. These are the trades that I found on the weekend with Friday closing 11/17/17, so November 17th, 2017. You will notice that I'm posting this. If we look at this chart here, you can see that it actually says November 20th. I'm going to go with the previous week's close. I'm going to ignore today as an open. I will go ahead and update the stops the same way that I would. You can see that I've actually updated some of them already, but I'm going to go ahead and re-update them anyways to give you an idea of exactly how the Momentum Bro strategy works, of how you use a weekly closing bar off of a Hakanashi candle, and you update it in here on the Momentum Bro trading playbook, how it will automatically update your stop as it starts to dynamically move. So let me just get started. I'm going to start with the stocks that we covered last week. So if we look at this, there's been 2 new add-ons to the Momentum Bro 6-week swing trade. It's SFUN and ZAGG, Z-A-G-G. The rest of these are all the same stocks from the previous week. So we're going to go ahead and start with just these ones first, since these are new, so we can get an idea of where we would be with them. With SFUN, I don't know what these stocks are. I'm looking at them for the first time. So this is actually quite a nice signal. Just here off of the ADX, we can see that it's actually showing some good strength. It's breaking over the 50-week moving average, which is solid. And it closed at, what was the close here? The close was $4.73. Let's go to the Momentum Bro trading playbook. It looks like I probably already had it because I'd actually done this a little bit earlier. So let's see. It's 473. I did 472. Not sure why I did that. Let's go 473. Probably because I added it today, actually, when I was at work in the middle of the day. 473. Looks like we could have position size. If we were on $2,000, which is pretty large. If we were even doing on a $5,000 account a 1% risk tolerance, we'd be holding 65 shares at $300. Our stop would still be at $3.96, which you can see it doesn't matter if your risk is larger or smaller. Your stop is always going to be based on the ATR, and as you can see, I use a simple Fibonacci number, which is the 1.61803, just times the ATR and then minus whatever that actual thing is. Just gives a good place to be able to keep your stop. That would actually put our stop here on this one, way down here, which would be nice if you think about it. We'd be way down here at 396. We'd be under weeks of resistance. It hasn't closed below this really since September. So it's the middle of November now, which would actually be very, very nice. I'm a little concerned just around this. Here, the full stochastics. It is showing it's a little bit low in its cycle. But at the same time, if it gets a leg up, it definitely could show a nice spike and could continue to ride for a little bit. So that's actually a good signal, and also a good signal that we have a lower high right here while having a lower high on the stochastic. At the same time that we see the ADX breakout and it's still holding above 20. There's a lot of good signals on this chart. So if we were taking this position right now, we'd be in at 473, and our stop would be at 396. Now let's go to ZAGG. ZAGG, actually, this is a beautiful chart. And actually, when you look at the stochastics, you can kind of see what I was talking about a little bit earlier about how just the stochastic is turning up, which is a great signal for this actual stock. It means that it is, from a cycle perspective, it is turning back up to a higher cycle. It is not going down like we would see here, or it might be like slowing down and the price might actually just consolidate for a little bit. We can see that here when the stochastic was a little bit under, 50, it turned up, and that was a great signal. And the ADX, the plus DI, was above 20. The ADX was high and continued to rise, which shows that the trend is actually very, very strong and getting more powerful. And the prices continue to break out with solid volume increases, which is always a positive sign if you're looking at any stock that is breaking out. So if we were going to be doing that one, we would have used the close of 2053. Let's see here. We would actually have done it from 2053. But I did add to this one today in the middle of the day. So when you actually do add to a position in the middle of the day, you do want to update it for what the current price is, not just what the closing price is. If we looked at it over the weekend on the 13th or on the 17th, 18th, or 17th, 18th, or 19th, we would have seen that 2053 would have been a good stop. That would have put us at 1684, 1682 for a stop. Put us right about there. It's actually pretty solid. It's underneath the 10-week moving average, which is actually usually a very safe place if you're on a really solid breakout. So that would actually be really, really good. And let's get an idea of some of the stocks we were looking at last week. IVC. I don't think I updated these. I may have over the weekend, but so if we were using the previous close, we would use 1735. Oh yeah, let's update that. 1735 would be the price. That updates the stop to 1472. Still above that. Now let's look for HDP. I'm sorry if I'm going fast. If you watch the previous video from the 10th, you'll understand where these positions came from. I actually covered them in a previous video. So now if we're looking at HDP, you can see that last week. So these must have been from when I initially got into them, probably. I probably got in at that price at 1834. Let's see, this week, or last week it closed at 1879. So on the spreadsheet, what you're going to do is actually just update the current price. Your purchase price is always going to stay the same unless you add to the position. But you're always going to want to use this, the current price, as what the weekly closing price was in the Hakanashi. It's going to give us an updated stop of 1632, which is nice because that is well underneath. That's a nice ways down here, even though you still, let's say for instance we only had a $50 position. Again, the stop's not going to move no matter what your risk amount is, because it's based off of the stop. The only thing that's going to change is your position sizing. Position sizing is probably one of the most key aspects of all of trading. Once you get that down, it really opens things up and makes it a lot easier to do and makes you feel much more comfortable when you're going to sleep or if you're at work throughout the day. You don't need to watch your stocks. This was a stock that I covered last week, CDXC. This one just doesn't have enough volume. Honestly, this just doesn't have enough volume for me to feel comfortable trading. Because even on a solid week, we're getting about 3.6 million shares traded. So that's under 1 million shares per day. I just don't like to trade stocks that if I had a large account, I wouldn't be able to trade because of volume issues. I don't want to get myself comfortable with my system being good at trading low float, low volume traded stocks. I want to trade good stocks. So I'm just going to skip that one. CSIQ. This one I've actually seen start to come up on a few people on Twitter talking about it a little bit. It is showing a nice solid breakout over the 50-week. It's held it for a while. It's got some nice consolidation. If we look at the full stochastic, it is at least showing that it's gone above the 50 mark and is turning up a little bit. The ADX is going positive. I'm actually going to take this off. The ADX is going positive. And what we can see is that the stock itself is actually continuing to rise ever so slightly, but yet it is still rising. So let's say before we were at 1774 is what I said it was before. Must have been what I purchased it in for. But I should have used 1809 because that was the highest price recently. And actually I should update it to 1809 on CSIQ and allow that to be the highest price for the close, because you always want to use the highest close that you possibly can in the past 52 weeks. On this spreadsheet, because it will update your stop. So the stop is now at 1559. We're good. We're solid. Don't really have to do much there. Let's look and see FNF. Now, Fidelity, this has been an interesting one because this one has continued to break out. I actually covered this one on Momentum Bro, I think, on the 23rd of October, that weekend. I put an article up. You can go back and look for it. This is one of my favorites. And especially when you start to see one of these flattening out, almost like a down drop in the ADX, but then it continues to flatten out and then turn back up. And you can see in the full stochastic here, it made almost like a double bottom at the 50 and was like, nope, not going to go down. And then started to turn back up, and you see a clear correlation between the price rising and the oscillator rising up as well. Another example of this ADX flattening out here and then turning positive is actually my current favorite position, which is Square. We'll get into that in a little bit later, but I want to cover it now. Actually, when I got into this position in June or so, I think I got in back here, I was concerned because I saw the ADX was dropping, I saw the stochastic was dropping. Then as we started to see a breakout, you see the stochastic turn up, shows a solid positive. You see the ATR go from plateauing to a slight curve up, and you see the volume increasing, which is always a great sign. A lot of positives coming out of Square right now, and I see a lot of those right now in FNF. In Fidelity. Just a good solid chart. You may want to wait for a little bit of time for the stochastic to come back down, maybe get closer to the 50 just for a general better entry, but overall, you are in a good stock. You've got the wind at your back. Volume is good. The simple moving averages are being respected. You know that because it's Fidelity National, it's got a lot of institutional support from banks, which is just always good to see. It closed at 39.13. We're going to go ahead and update that. It's not quite to its pyramid position at 40.42, but if it does break 40.42, even as a high for the intraweek, we would add another position to it. We'd add another... If we were using 50 shares, or $50, we'd add another 20 shares to it just because we'd still continue to respect that. Let's go to ESIO. This one has definitely broken out. So this one is now at, it closed last week at 23.23. Michael Jordan in the house. So 23.23 raises the stop up to 19.75, which is solid. This is just really, really moving quickly. So hopefully this can consolidate for a little bit. Let the simple moving averages catch up for a little bit. We'll be watching that one for a possible breakout and close over 25.23. It's pretty close right now on the 20th here. Hopefully that can do it by the end of the week. XNET is at 17. Wow, that is a breakout. So the previous week it closed at 14.11, which is a good breakout. Let's see, 14.11. It is definitely getting close to that 14.97. Then it's going to have to be able to break. And if we look at it now, it's currently broken that. It's broken the pyramid 2 position. So we'd actually add 2 more units of risk. Let's say we were doing, essentially, we'd have a $150 position at that point. We'd now have 53 shares, $751 position size. This is going to be, as you can start to see, this is kind of how this system works, is that you have a series of small bets on a lot of different stocks, and you're not sure which one is going to be the one that breaks out like XNET here, but when you do find one that breaks out like XNET, you want to actually double down on it. You want to start to add more to it, because the rest of these would have just a $50 risk amount. XNET now deserves to have more capital allocated to it, and that's actually what we'd be focused on. Would just be that, okay, XNET now by itself has shown enough momentum and has shown enough follow through that we want to add more money to it because we think it's going to continue to be a winner. NRG closed at 28.89 last week, which is up a little bit higher, not terribly high, but with a small ATR, it can continue to grind. We'll go to AYX. I'm blowing through this because I'm wasting time. I spent a lot of time explaining things at first. Let's see here. This one's not 25.51. Ah, yeah, I'd already updated it. 25.51. It's not quite to its pyramid position, but if you look at the actual close, it could definitely close above that by the end of the week. Let's go to the darling of last week, Limelight Networks, which had a solid close. So 2 weeks ago, it closed at 5.54. This week, it closed at 5.79. Actually, not bad. Updates the stop. We are looking for it to break 647 for it to be anything reasonable. And we've already gone through SFUN and ZAGG. I don't talk about Square a ton on here, but I will let you know that Square had quite a sweet week. It went from closing at 41, or it closed 2 weeks ago at 37.77 and closed last week at 41.84, a huge up week with an additional largest volume it's probably ever had of 105 million shares traded in 1 week. I mean, just as an example, the week before it had 75 million shares traded. The week before that, it had 50 million shares traded. The week before that, it had 39 million shares traded. It's just continuing to break out with strong volume. It's exactly what you're looking for. And if you think about it, even today was one day. It was just Monday here, the 20th of November, 2017. The volume was almost 30,000 shares traded in one simple day. I mean, to take that into consideration, a month and a half ago, that's what the volume was for a full week. Right? Like on the week of the 18th of September 2017, a full week was 28,000 shares traded. You had 28,000 shares traded one day today, and it continued to move higher. That is a great signal for a stock that you're trading, and it really gives you an opportunity to see how momentum can break out, and that's why we traded at MomentumBro.com. Because if you get a simple spreadsheet where you can get the current price, you can figure out the ATR, you can generate your stop, you know what your risk amount is, and you can have your shares and your position size built in, and you have a very simple system. You can trade very strong, very volatile stocks as long as you're willing to take the execution signals that you have, which is either to pyramid to the position or close the position if you get a close above or below that number. Now, again, if you ever have any questions, you can always go to MomentumBro.com. You can always feel free to join our list. You can always get our PDF about how to avoid the 3 mistakes all traders must overcome. It's about learning how to avoid bad risk management, over trading, and style drift. Style drift is so expensive. Every trader goes through it. Every person who's interested in markets goes through it. Every person who takes a position goes through it over time, if you're even lucky enough to develop a style in the first place. But we all do style drift, and we're on our process to learning some method that works for us and for who we are. You don't want to go through it. Did it for too long, it's not worth it. Become a momentum bro. Trade simple. Ride the wave.